This review is for Wednesday, 15 March. The market today had a consolidation day, I would say. Minor doji. Range was pretty good, but you can see on the composite here, bumps its head against this uptrend line here and could not put together a day that would blast higher, falls from that. Actually, the composite does a double top on that today, which is quite interesting. When it double tops up there, plummets very nicely. So we have short-term break of the uptrend. This is yesterday's big juice in the afternoon. People decided that the move back above 3,000 was fully sustained. The market wasn't going to respond much to what the Fed decided, and it blasted. A little too much too fast, had to consolidate, double top, but broke and came down. Did end with an uptrend in the back part of the day to continue higher, however. So I have to see what the open is like tomorrow and what's going to happen from that, how that might may or may not continue. The S&P did not manage to double top. Tomorrow you've got this downtrend line to pay attention to going into the day, but that's pretty steep. Probably just, well, who knows what that may not be operative early tomorrow, but could be referenced. The S&P was not actually able to make a double top off its highs of the morning, although it had the same daily type pattern. Actually, it was a little different. Let's see what level this would be. It went a little bit above its uptrend top boundary, and then came back. And what else was significant about that? I wanted to see that. Let's hear the 20-day. Here we are, opened right on this trend line, having ridden up for a while, broken below, and continued up in a somewhat parallel fashion. You can see this is a little bit accelerated. Didn't have to come back down to it. But it opened on that today, this trend, to try to live back above it, where it had been below, surging past it to close basically right on it. Opened above it, couldn't maintain, and fell back below it. The point at which it fell back below this line, here's your break level right here. Very nice. Very clear. It hesitated for a bit, but then broke on down, came up to touch it, and then fell in the back half of the afternoon. And so this was the inability of the S&P to make the double top. However, this was in the longer term line. That level was pretty much closer. Already discussed that. It was able to get above this top, whereas the composite wicked off of it. So the failure to make a double top. Don't know how significant that is for the S&P. Perhaps the Dow and the S&P are going to be weaker than the composite going forward. They certainly seem to have been through a lot of the run up. The slope on the composite, you can see switching back and forth here, is greater. The movement was bigger, more pronounced on the composite, and you can see the distance above the tops back there is greater right there. So the composite has been a little bit stronger than the other averages, and we'll have to see what happens tomorrow. Got this top line controlling, could come up, double wick off it again, and give an actual real retracement. Give some sort of real give back if this is too much too fast. Maybe tomorrow or the day after, it needs to come all the way back down here to this top here before it gains support again. But could very well have an initial run up again tomorrow, maybe even go quite a bit higher, and that will either sustain and blast higher with a lot of enthusiasm, or it will fail. And I think if it fails, if an initial run higher fails tomorrow, I think you could have a substantial give back throughout the back part of the morning, back part of the day. So that's just my thoughts on that. Let's go to four main stocks here. Again with Broadcom. Here's a 10-month chart. Broadcom gapped up, went a little higher, could not sustain, and gave a real nice give back. A real nice scenario after a big run up like this, a big correction back up into this movement. Failure to sustain a gap and move higher is a real nice scenario for a serious give back, and that's exactly what you got from Broadcom. Here's the initial, essentially, it's trashy trading in here. Decent movement. These amounts are not huge, but you can see it's messy. Has a second attempt to get up to these levels of the highs of the morning, fails out immediately, falls below this uptrend line, and just keeps falling. Several other places you could have decided to take this on down. Once this fails and starts to head back down after a break like this, you can really definitely be thinking gap closure. You can be thinking this level at the least. I would say if it falls below there, certainly it needs to not fall below the lows of that morning, especially the right here at the early. You're coming down for gap closure. You have to evaluate things after that based on an overall macro picture, a bigger picture like this. But this was at an extreme. This type of movement, just like this, was pretty extreme down. You see that there. You can tell that. This was pretty extreme to be back up here early this morning. So a nice give back on the day's candle, quite, I don't know, that should be fairly predictable. Definitely should hold that in your mind as a serious possibility, especially if you're looking here like at the 20-day and you've got some of these levels here, of breakdown levels back here. And here really is a breakdown level. This is a close, and then the next day it plummets early. I think this was a real plummet. That was very fast. And you're up here at some of these tops and resistance levels. That's rarefied air up there. And after this kind of movement up and a failure to maintain those highs, you can see on here, it ain't no big thing to just come on down a substantial amount. Ain't nothing but a thing, and here you go. You're back down to this uptrend line by the end of the day. Very nice. So seeing just how accelerated this type of movement is, being way up here, you're accelerated even more. You get that break that could go for a long period of time if you have the context of something like a 20-day to bump that analysis up against. So that's what you got. You got a real nice give back from this rare air that couldn't maintain these new highs and couldn't maintain above this level, which was a break level before. So that's pretty close there to that break level. You got some tails coming down to it in the middle of that action. It starts going below it. Okay, well, guess what? You got gap closure, but it was stronger than that because this was such a big movement. Gave it an all-day candle down, and the market, even the resurgence of the market to try to get back in the mid part of the day to do a double top on the composite, well, that didn't affect Broadcom at all. Broadcom was in a great position to give a nice give back, and it did. So tomorrow, you could get another one to come back down. This is a lot of movement quickly. You could continue with serious movement back down, come back to the 20 for a tail down at the very least before maybe coming back up to 37 if it's going to be strong. Here's the mid-range of all of this movement, or close to it. Let's say call that 36 exactly. That's pretty good. Maybe we need to get back down to 36 before going higher. It did fall and close below this important level of 37. So it couldn't maintain that, and it didn't maintain above what is essentially the break region. All of this is kind of the break region. If you've got these going through these wicks here, say you go off of these two, I'll some of this is getting kind of confusing. Back when this fell, God, if I can get this in here, let's see. There we go. Okay, so that was the movement up, the attempt to go up, 2 days of failure and rollover, and as we talked about way back, there was a competition between these two trends, the downtrend and the uptrend, and you see which one of them won. Well, the break level is on this day. Where was that? The break on the day. The break level is right there. Visually, through all this action, you might think of it as being kind of right there. That's the intersection of those lines. Well, either one really, but you came down below both of those. So failure to maintain that level, it got back up to it, was up above it briefly, but it's failed to maintain those now. So that could very well still come on down for a nice retracement down to 36, or at least to the 20. But these levels in here, good chance of that. With a gap up tomorrow, however, if the market is going to continue higher, a gap up, let's clear some of this out. A gap up could be real nice because it's tailed off of this uptrend line. A gap up that stays on this line or is above it, comes down, tails to it, starts going higher again. You could get another big candle up, and we come up to move back up to these tops here. So this trend line is all important for Broadcom. I think that the decision made based upon this trend line will characterize the day tomorrow. Open below it, wake up to it, crash down. A break candle below it would mean downside. Tail off of it, moving higher would be a pretty nice upside candle. Possibility of a nothing candle, a small candle tomorrow. But there's possibility of that. But I would say this line has a good potential to make a big decision, allow for a big decision for Broadcom, and then have big movement with that. What else have we got here? I think we've taken care of that. Go to SanDisk. SanDisk hit 51, hit this downtrend top, and just had a real nice give back. Talked about how the enthusiasm for the upside on SanDisk was less than Broadcom and less than X yesterday. And you can see that, and talked about how if Broadcom and X were going to be, not the best trading today, and this is not a particularly fast, it's not a super slow, but it's not a particularly fast drop from Broadcom here. It had to work its way down all day long. SanDisk, on the other hand, was a break in and a plummet. So talked about how if Broadcom and X were not particularly good for trading, SanDisk, having been different yesterday when they were excellent, could have been better trading today. That was the case. Broadcom was a little bit slow and meandering. X was miserable for the downside and actually maintained itself. This is from news for AK Steel, raising their prices. People, if they raise their prices, X is going to raise its prices. So people are looking in terms of greater margin profitability for X. So that's what this juice is, upside here in the middle of the day. That's what that is. But you can see that it launched this right off of 28 again. Little curve back above critical threshold of 28. Starts to work its way higher. Moves above the previous attempt to go and just gets going. And this was primed and ready for the AK announcement. But before that, you see X was crap for trading. Well, once again, SanDisk was different from the two yesterday. It was different again today. Much nicer trading on SanDisk in the direction of the break. Just very nice movement downward. So the weakness shown yesterday was evident today as the market consolidated and was weak and did its stuff today. So SanDisk downside was pretty good. Tomorrow, what do we got? We're wedging between these two trend lines. And this is right. This is in the lower half of this range here that it's squeezing into. You could get another movement back up to correct for that. 50 is the key to this movement right now. It's trying to decide whether it's going to live back up here, take another run up higher, or whether 50 is going to be the lower and it's going to start living back down here toward 46 and these levels. So 50 is that decision point. Currently, the upslope is of greater incline than the downslope. So you'll have to see which falls out of this. But this is a pretty severe break candle downward, just like this here. It shows that this movement up is weak to give a candle down that is this bad. So could this fall, break, and fall out tomorrow? Yeah, I'd say probably it's going to be weak below 50. Maybe it will wick to 50 and plummet from there like it did from 51 today. If it does, that could give another big candle down that ends in a break below this, or it comes down and touch it. SanDisk could be quite good tomorrow. It seems like it's wanting to move places. Then again, it may dither in the middle around 50 and not yet be ready to decide, especially if the market is not yet ready to decide. X. Here we go. Primed for a hook back. Breaking back above this with this movement here. Breaking back above and staying above this downtrend line with this substantial break, breaking an uptrend line that was of this importance. Okay, not taking that opportunity to continue lower and actually have to come down for symmetry on the fall from 32, get the right line here, 32 to 28, right, and to 24. Not having to come down for symmetry on this fall and reversing back up like this on a sustained 3-day movement, 4 days, 5 days, 6 days. Okay, this is strong to reject this break and fall, a break and fall of this significance after all of this. This is some strength. This is showing some reversal strength. Living 2 days above this line and then opening up the next day was really a key. And yesterday was the telling open for X, given that this strength back up. And of course, the market being open above 3,000 is just like, okay, yeah, you're getting upside. And it fulfilled today. Where did it end? End right on this line, this uptrend line, this major uptrend line. So now you've got this situation here where your downtrends here, and then here's your short-term uptrend. You're fighting back up above 28. I don't know that there's any reason not to believe in X back up above 28. It may very well come back down onto 28, but this is substantial. And you saw the reaction on the AK decision today. I do think X is finally going to stop being punished if the market is recovering, and there's indications that it actually is finally. This movement back up could have some real legs. It really, really could. So it looks like we don't need to come back down here to 20. This is our new floor for X for the long term. Break out above 32 again and living in this level, I say you'd go to 40 very quickly. So a little farther on, this break back up into this region, I think you would recover this very quickly, back on up to these levels, get back above. And then X is a completely different story after that. But this is very nice. Being above 28 is key. It actually closed above 29, which is quite impressive. Near term, it could have a pullback, but X is looking pretty damn healthy for a serious recovery. This movement lower has been fully rejected, I think. So you've got an uptrend line here and the critical level 28 for X higher in the future. But as you can see, this right now has got to be figured out. This uptrend line here, this close right on it. Something also interesting with X. This is going to go a little long. I'm getting a little long-winded here. Is this where I had it? Let's check out here. X. Zooming in from 10-month to 6-month, you can also see some things I didn't recognize on the 10-month chart. A little closer examination here shows that this wick through this open, that definitely defines a bound. Well, that's where we closed today. That's quite interesting. We were able to get above it, but the close today, okay, is on both of these lines. Essentially, let's see how accurate this is. See, we can draw this very accurately here. Okay, so we're actually a little bit above that, but the close was on the top line here. So falling back below this line here and this line, you could get a real nice retracement down. Staying in this little pocket right above these two for tomorrow, above 29, well, you could get another big candle rocketing upward. But it's kind of a decision point here. Opening below this, coming up to this, and starting to fall back again. Who knows? You just have to look at how these things play out. But there's a lot of structure in X lately through all of this. A lot of structure and a lot of references. So drawing your lines and paying attention to each of those little key things, you ought to be able to suss out the story of X. I would say this is so clear. Bumping against X and then a break and roll over. It's just kind of criminal not to have caught this and this drop below 2750. A lot of this in here is just unconscionable that we didn't catch these, but it's got such good structure. It's really good to draw those lines and pay attention to X. Netflix, real quick, like we talked about yesterday, had Netflix basically had a break open today, and you can kind of see that in the market action. I don't know what that's about. There we go. Okay. So this new trend line based upon the tail from yesterday talked about how this was increasingly rolling over below the MAs again, and that it was going to move on down. I said possibly to 100, but I didn't necessarily believe it would do that in a single day, but it came down nicely to this bottom here, right through this open here, and some, this tail down here. So still a lot of structure, very clear movement sometimes from Netflix. And have to see what happens tomorrow, but this is not looking good for the upside. If tomorrow is a bad open again, I do think you see 100 tomorrow. I do. It could open up here and once again have a running start at it, open higher, but begin to drop and pass these levels. It'll come down to 100, I think. Be a nice rollover. But anyway, the point is there's a lot of structure, and Netflix is definitely worth taking a look at. It did manage to break this current downtrend, but you saw it had a downward movement on the day. This is just a 5-day. If we go to the 20-day, you can see that uptrend, where was it? Through here, yeah. So the open was down here today, so a break open comes briefly back to it, falls out right at that line I talked about, and manages to not get back up to where it was, I think. Something looks a little off Okay, I guess it opened up here. So that bottom line's a little bit off, but we kind of saw that we saw it on the daily, though. You can kind of see what's going on there with the daily. Okay, the peak was right at it. Anyway, that's kind of that's still, the action is still relevant. Have to see what the open is relative to this level tomorrow, falling back below and weakness. And then, of course, certainly passing 103, I think you see 100. So you could have, if you were to judge by passing 103 tomorrow, and did it well and paid attention, you could catch it down perhaps to 100, get $3 on Netflix down if things are weak tomorrow and the market's in support. The market doesn't have to actually be in support. It just has to not be blasting upward. Netflix is going to do what it wants to do, but as you can see, the floor was pretty solid at 103. Floor is pretty solid at 103. So a run back to that floor, you could take it there and hope it goes through it, or you could make a decision if it actually does go through it to try for 100. Then again, this could be a pullback down, and if you start breaking above these trend lines down, okay, you've got, okay, we're bumping against trend line. Looks like I'm going to fail, but I don't really fail. I start breaking above. That's a recipe for major upside. Okay, a little bit of a hitch back down, serious support. This is closure of the gap. We've got a double closure on this gap. Go back above this downtrend line. That's a serious story for upside and a reversal back up to head back up to these levels. So that could be the alternate story for tomorrow for Netflix. So next couple days, Thursday and Friday, Netflix could have some really tremendous trading. What else? UTX still being a champ. Apple's nuts. Once again, just higher. Apple's going to 600, I think, unless today's action, which was pretty back and forth. Big fall, recovered, went up again. This may stage higher. This may be needing to hit 600 before it stops itself. Google went above 620 twice today, which is a key threshold for it. Couldn't maintain it in the final analysis of the day, ended down. So not sure what Google's going to do. Could be interesting. Right here, this is a strong hook back up with the market. And it's now 2 days living above this downtrend line. So tomorrow, does Google actually really move up to 630 or something? Because this is a pretty nice, like we talked about with the possibility for Netflix. It looks like it's bad and it's going to roll over and looks really terrible. Comes down a little bit, hooks back up. This is a very strong reversal. I do think Google's going to work its way back up here to 630, 640. This is pretty damn strong, and being back above this for 2 days now, 2 closes, that's pretty strong. So I think Google could have some serious upside soon. AXP blasting out. Talked about how well it did yesterday, and goes back above 54. Real nice cradle here, and just blasted out today. So AXP may give it. I don't know whether that'll be good or bad for the next day or two for trading. If we look at AXP. We see that AXP kind of doesn't really have a top on it right now. It reconfirmed this top, which was a little higher than anything it had for several years, and came back up to it. Today gapped above it and was therefore just a fantastic candle up, making new multi-year highs on AXP. So looking for things like that, and if you caught it, seen it, get yourself a real nice candle on the day. That could continue. It could hesitate tomorrow. Have to see. If it's going to continue, it might very well be morning unfinished business, relatively early and perhaps not immediately from the start. This relatively flat plateau, after all of this movement, you get more of this movement tomorrow. Maybe it's a gap up and it does go like this. Maybe it's a little bit more hesitant, takes a little while longer, takes 30 minutes or something to develop. But you might very well have this again tomorrow for AXP. So that's a possibility. So roll through that and take a look at that. That's enough stocks to talk about. Plenty of trading for tomorrow. NVIDIA breaking down this rollover. Didn't really talk about the past couple days, but this double fall from 15 was pretty clearly significant. Couldn't even make it back to 15 again this day. So this break here at 1480 today was quite nice, and you could have predicted this additional long fall on a break like this after coming down from 15. That's a prediction you can make pretty easily. But that's a low dollar stock. No need to talk too much about that. Okay, that's it. That concludes this review. Good luck tomorrow.